Good evening. It's Quant Trade Edge, and I was just catching up on my homework for tomorrow and wanted to share the setups that are setting up here. With the Australian dollar, we had a ROC flip here, as you see. That's what this line is here. It's a 2-period rate of change. We had a flip, we had an up day, we had another up day, now we're flipping back down. Flipping back down typically means you go back and test the high, but also when there's a breakout, like this breakout, you typically skip one cycle. So you don't want to play the short side of this next cycle. You want to keep looking, with a long bias or a neutral bias. And what's happening on the Australian dollar right now is, this is the 20-period exponential moving average. On the 120-minute chart, we've pulled right back to that level. And if we look at it on a 30-minute chart, it's a very clean ABC into that level. Your ABC. So this is your tight risk bar for a 30-minute flag for a retest to the upside. And below this point would be a 30-minute U-turn. So you're not going to want it below there. And thinking back to earlier when we had the 5-minute U-turn, that 5-minute U-turn bottomed at 75.22.5. So, perhaps going for a target ahead of that would be conservative. And, given that this was a 6-tick bar, you can reasonably, 86 to 20, 30, you still got 6 hour worth of room, to catch your 4R somewhere in here. So that's Australian dollar. And, if we go back to natural gas, I mentioned a U-turn was setting up, and then I posted it on Twitter, but this was the 5-minute ABC, and once we U-turned below that spot, we, kind of sucked down about 8 cents without a lot of heartache. So, since that point, we've recovered, and then notice what is serving as resistance is where that 5-minute U-turn was. We popped above it and popped right back below it. And these are kind of settlement bars. 3:55 to 4 p.m. is kind of a closing BS bar. So that pattern is what I'm thinking about here on the Australian dollar, is that just to be conservative, let's try to get out ahead of this 75.22.5, which is still plenty of room to catch on this 30-minute ADC, which is a 120-minute grail buy. And grails are something that were popularized by Linda Raschke. For a grail buy, you want the ADX to be above 30 at the peak, as it is, and then you're basically buying a dip down to the exponential moving average. This could be considered a little bit climactic. You typically want a very smooth move into it, so this may not be the ideal example for one of those. But that's just, the setup we have right here. Now, the best thing I see setting up is a copper short. And, we've had 2 PF3s to the upside. The ROC is flipping down. So all of those things are very positive from a Taylor standpoint. And then we tested up above this level that 4 days ago. So this could be called a turtle soup failure, a 2B, whatever you want to call it. It's basically a bull trap where bulls got trapped in here and now they're being flushed. So we're also changing from a string of up bars to a string of down bars. That just happened already on the reopen. So this may set up sometime in Asian hours. But if we look at the low of the day, we take this out so we can focus on the bars. We pierced it at 5:30. We have an up. This is all up so far. So yeah, we'll be looking for something like this to give us a trigger bar for a short. On gold, not a lot brewing. I mean, in theory, this is pretty weak, but it's kind of just rangy. In theory, below this, we could have a 4X setup. Not my favorite thing, though, right now. Oil, same thing. Below this, we could have a setup. But don't mind it. But again, it's not as beautiful as copper. If we go back and contrast what we have going on in copper, we have 2 PF3s. That means the market gave it all it had on these 2 days, and that's as far as it could get. Then it left a very clean trap above this high from 4 days ago. So you've got trapped longs here. You've got everybody who wanted to get long running it up as much as they could, and that wasn't a very strong showing for that. So that's why, for me, this copper setup looks better than some of those others. Now, here's an interesting thing. On these indices, these are still up bars, because on the S&P, this is an outside bar, which takes the label of the previous bar. So we're still technically in an up bar. If we take out the low of today, then we would switch to a down bar, and then this low would be in play, this 45.0125. If you had to place orders and go into a bomb shelter and pray, you would say that if you broke below this, you're most likely going to go hit this. It's only about 6.5 points away. And the same thing on the NASDAQ. We've got potentially an A, B, C forming, but we don't have a down bar yet until we take out this low. So if we take out this low, the next target is going to be this 14.725, which is the low of this first leg down. So this gives you a little more room. From 780 to 725 gives you about 55 points of room. The Russell looks a little bit different. It's already got an ABC structure. What it basically had a 3-bar breakout pattern, and it broke to the upside and reversed and went through the downside. That's a very bearish, bearish setup, because that basically said that what should have happened did not happen. When you have a 3-bar consolidation like this, you would expect follow through in the direction of your breakout, and the fact that it couldn't even hold that breakout, came back into the range, then you would expect a move to the bottom side of the range. Well, it kind of blasted right through that. So, remains to be seen to what extent the Russell is going to move on its own away from the other indices. But right now, you've got an ABC pattern forming, but it's going to need a little bit of time to. To settle down. So there's our A, there's our B, and we would need a lower low to go make a C somewhere in here. And I guess we could take a look and just see if there's any obvious levels to look for. If this was the absolute low, and this was the absolute high. Okay, so where we went to today was the 38.2 fib. The 50% line is down at 2009.50, and it looks like there's a pretty good chunk of consolidation around that area. So I bet that's also a high volume node in there. So if we go down further, this may be a target to start looking for divergences, if you're maintaining the bullish case that this is an ABC down and we're going higher. That's about all I had for today. Again, copper is my favorite setup. This Australian dollar also, testing higher. It's a good risk reward. You've got a very small risk bar. Beyond that, I'd probably look at crude if we took out the downside. On the weekly, we're still inside on crude, and for all we know, this could be an ABC forming on the weekly. So the weekly low is 97.78. The daily low was 98.88. That's interesting. 97.78, 98.88. So $1.10 difference. So that's the first stop to go. And if we get that, we get our little ABC, and then kind of our next stop would be this 97.78. So that's about it. You don't want to strain too hard looking for things that aren't there. It's okay to have a day where nothing sets up. It's okay to have a day where, if the one or two things that you're looking at don't work out, then just walk away. It's better than the alternative, which is wasting your time, wasting your emotional capital, and wasting your financial capital. So anyway, please drop a like and subscribe. Like to be able to push this out to as many people as we can, and obviously as we get more a bigger and bigger community, we're all learning more, and it gives me more time to work on content. So anyway, I hope you like this and hope you had a good day trading.